after just a terrific day where the Dow surged 511 points. S&P shot up 1.2%. NASDAQ pole vaulted 1.16%. Buy! What would allow us to have more of these sessions? Now, we know they can happen. Days like today are the reasons why we stick around this otherwise ugly market, correct? But we also know they've been few and far between, which is why everything in this market is a trade until the bears are finally slain and the bulls can trample unimpeded, which is not the case. After all, as I said last week, this market is deeply oversold. It remains that way even after today, so it can't continue to bounce. For most of you, though, that's not enough. You don't want to bounce. You aren't traders. I don't want you to be traders. So what needs to change so there's no bounce and there's just investing? As I told members of the CNBC Investing Club in my every single week think piece that I put out Sunday, we're stuck in a bearish box with occasional bullish breaks like today. Still lurking, there are unrelenting negative forces, some of which are obvious and some of which are much more opaque. So what can turn things around for more than a day or two? Well, let's go over them. First, we need many, many more buyers of U.S. government debt. For the longest time, the natural buyers of U.S. treasuries were from overseas, especially China. Just a few years ago, they owned more than $1 trillion in U.S. debt. That was rivaling Japan. Now China owns just over $800 billion, and you know what? They've been sellers, not buyers. These sales are part of the run-up in rates. If we want the bond market to turn around, they need to become buyers again. I don't see that happening. Japan isn't a buyer anymore either, just a holder. I can't see them increasing their stake. Our government needs to borrow massive sums of money to cover the deficit. Washington has no plans to rein in spending anytime soon. I haven't seen one of you. That means we need more buyers to offset the impact of the treasuries that they're selling, or else interest rates will keep going higher. It's been a historic run higher, and stocks will become ever less attractive versus bonds. That's why when we find out what issuance Treasury is going to give us when they publish the schedule Wednesday, there could be a major bond selling in anticipation of those sales. You see, we did get a fourth quarter borrowing projection from Treasury today, and that was less than expected, $776 billion, which was $76 billion lower than the previous projection. That's positive. But not if Treasury sells 10, 20, or 30-year paper to meet that hole in the budget.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.